Well, the markets have been absolutely crazy. We see Bitcoin going down considerably, gold losing trillions of dollars of market cap in a single day. And why is this all happening? I have to say it's because of the de-dollarization that we are living through right now. So let's talk about the most over-leveraged brand in the history of global finance, which is obviously the US dollar, because we know for over 75 years, the dollar was belief. It was Bretton Woods, it was aircraft carriers, it was a pile of treasury bills taller than the Eiffel Tower. But belief, at the end of the day, belief has a cost. And in 2025, the world started to send the invoice. In 2025, the dollar index fell nearly 10%, the worst calendar year performance since the year 2017, and it's already tripping down the stairs into 2026 right now. What we are witnessing is a broad-based rejection of the global reserve currency by the very stewards of monetary stability, central banks. The world saw the tab. The world saw a $2 trillion treasury issuance calendar. It saw a Federal Reserve boxed in by stagflation risk and political noise, and it realized that the punch bowl is filled with diluted Kool-Aid and IOUs. I think it's very clear right now that we're not just watching a normal correction, we are watching hegemonic monetary fatigue. The US continues to run fiscal deficits of nearly 6% of GDP. The twin deficits, the fiscal and the current account, are leaking faster than yield can plug the holes. And you do not need access to a Bloomberg terminal to see this. So globally, the signal is even louder. The foreign demand for US treasuries is drying up. The real buyers of treasuries, they're not even sovereign governments anymore. They are hedge funds running basis trades with borrowed repo. That is what is backstopping the American bonds market right now. Leveraged arbitrage and not long-term trust of the government. And when belief breaks down, capital rotates not randomly but with surgical precision out of political assets and into monetary assets, into collateral, into scarce collateral, like we have seen with gold. Gold has seen the first wave, but gold is a metal. Bitcoin is a network. One is physical, the other is digitally sovereign, cryptographically finite, globally mobile, and terminally uninflatable. The macro tide right now is shifting beneath our feet, and it's not just about inflation anymore. It's about credibility, scarcity, optionality, and monetary exit velocity. If the dollar was a yield-bearing safe haven, Bitcoin is becoming the conviction-bearing escape hatch. And in 2026, that hatch is wide open. Let's talk about what the world's most powerful financial institutions did while the average investor was doom-scrolling the inflation charts. They didn't buy treasuries. They did not buy AI tech stocks. They bought gold, and a record-breaking amount of it. In 2025, central banks added 863 metric tons of gold to their reserves. That is not diversification, kids. That is evacuation. You don't build a golden lifeboat unless you see fire on the deck, and the fire is the US bond market. For the first time in 3 decades, the total value of gold held by central banks surpassed the value of their US Treasury holdings. You heard that right. The risk-free asset just got outpaced by a metal that yields nothing, that costs money to store, that takes forklifts to move, which has been the huge referendum on how to store capital in this day and age. So let's get specific. China dumped over $100 billion in US treasuries in under 2 years. Their total holdings are now below $683 billion, a level that we haven't seen since before the Beijing Olympics had a decent logo. And they're not alone. The emerging market reserve managers from Turkey to Brazil are doing the exact same thing. Why? Because US debt is no longer neutral. It has become political. It has become vulnerable. It's digital hostage taking dressed up as financial prudence. And this is the reality. Foreign official buyers only absorbed $64 billion of net Treasury issuance in 2025, while the US issued over $2 trillion. That's correct. I'm going to say that again. The United States issued $2 trillion of treasuries in 2025, and the foreign official buyers only absorbed $64 billion of that. That's like launching a lemonade stand with no lemons and praying that hedge funds show up with the powdered mix. So we have those hedge funds, they're running those basis trades, the leveraged tourists, they're holding the bag on these trillion-dollar debt debt rollovers. This is musical chairs on an aircraft carrier under attack. And it's very clear what had to happen. The central banks, they were watching this whole thing unfold and they decided to opt out of the system entirely. This is de-dollarization. They're not saying it out loud because they don't have to, but when you look at their balance sheets, they are screaming, we do not trust the dollar to store value anymore. And this is the question that no one dares to ask. If they're already rotating into non-yielding gold, what happens when they realize that there's a reserve grade asset that's digital, self-custodied, unforgeable, transportable at light speed, and divisible down to the 8th decimal? What happens when they rotate into Bitcoin? And de-dollarization isn't a theory, it is a multi-trillion-dollar migration that has already started, and it's picking up speed like a sovereign freight train with no brakes. Let's break it down. Over the last 24 months, the world's monetary policymakers looked at the US playbook and saw a giant Control P button labeled fiscal expansion forever. They saw sanctions turned into monetary weapons. They saw $38 trillion of debt with these massive rollover cliffs, and a Congress flirting with shutdowns like it was a dating app, and they said, cool story, we are out. And sanctions were the initial spark, in my humble opinion. If you go back to 2022, if you remember, the United States froze Russia's FX reserves early in the year, and it sent one signal to the world: if we don't like your politics, your dollars aren't even yours. And that was the moment that the dollar lost its neutrality, and neutrality is the cornerstone of any reserve system. And from that point on, BRICS plus the Gulf states, they all got the memo, in my humble opinion. If your reserves can be turned off, that means they're not reserves, they are something called risk. So they started building out their own systems. You've seen these CBDC corridors, the yuan-based oil contracts, the barter systems for fertilizer, grain, and rare earth minerals. Now, are these systems polished? Absolutely not, but the trend is irreversible. It's clear that the dollar is just no longer the only seat at the monetary table. Now you layer in the market dynamics to this shift. We know that Treasuries used to be the apex predator of the capital markets, but today their volatility rivals tech stocks. The MOVE index, which is the bond market's fear gauge, it has traded near 120 for months, and foreign reserve managers obviously hate that because they're paid to avoid turbulence, not surf it. And then on top of that, you see the US bond auctions continue to get thinner and thinner. The bid to cover ratios are declining. Foreign participation, like I said, has been very tepid, and this is where it all converges. Number one, you have geopolitical fragmentation. Number two, you have fiscal overextension. Number three, you have that bond market volatility. And number four, that means that you have a shrinking trust premium in the US dollar. So the central banks, they always have to do what they need to do when the trust in the global order breaks down. They move into scarcity, which has been gold. So yes, while we are absolutely living through this historic change in the global capital markets, de-dollarization is not about the hatred of America. It is about risk management in a new multipolar world. And we're orange-pilled, we're Bitcoiners. We know that Bitcoin is the risk-off asset for a world that's run out of trust. We've established the why, now let's talk about what is next. We saw the central banks rotate out of treasuries, they're hoarding gold, but here's the quiet truth that no one in Basel wants to say out loud: gold does not scale. We know that gold is slow, it's very heavy, it's very hard to verify. You need vaults, you need armored guards, you need logistics. You need actually trust in other people. The central banks will be incentivized to hold Bitcoin because Bitcoin is digitally native. It's terminally scarce. It's borderless. It is a bearer instrument with zero counterparty risk. And for the first time ever, it is on regulated rails. We saw spot Bitcoin ETFs in the US attract $33.5 billion in net inflows, one of the biggest ETF launches in financial history, actually probably the largest. This was wirehouse platforms, registered investment advisors, institutional allocators, all finally able to get compliant exposure to Bitcoin at massive scale. And this is really where the game has changed. You also have the FASB accounting update, which allows the corporations to mark Bitcoin to market, which means that now whoever wants to buy Bitcoin, they don't have to have these impairment loss optical hits. Now, Bitcoin is a GAAP-compliant treasury asset with upside visibility to everybody. So think about that. A central bank or a large corporation can hold Bitcoin just like gold, but with real-time auditability, real-time liquidity, and zero geographic limitation. It settles globally in 10 minutes. It has perfect visibility. And unlike gold, you don't need to charter a plane to move it across continents. You just hit send. Gold is the analog reserve and Bitcoin is the networked reserve. And the more institutions recognize that Bitcoin doesn't just mimic gold, it upgrades it across every possible dimension, they will realize that this is the new monetary infrastructure. And the minute that people start to understand this, they're going to have to stop asking why Bitcoin and really start to ask, why aren't we holding this thing? Let's talk about scale, because the real power of Bitcoin is this. It doesn't need majority adoption to fundamentally reprice. Obviously, it just needs a tiny sliver of a massive system. The global FX reserve pool today is approximately $13.5 trillion. Now, what is this, you might ask? This is the strategic capital that is deployed by central banks, monetary authorities, and sovereign wealth funds to store value and backstop national currencies. Now let's just play out a quick thought experiment. What happens if just 1% of that moves into Bitcoin? That is $135 billion of new demand, which at current prices, that's enough to absorb half the entire free-floating Bitcoin supply. And remember, obviously most of the supply doesn't move. Long-term holders, sovereign wealth funds who have bought Bitcoin, the ETFs, the OGs, they're not going to be selling anymore after they have been. So this demand is going to have to get squeezed into this ever-tightening funnel that is Bitcoin. But it does get better. Bitcoin has something called extreme price elasticity. Historically, for every 1% increase in dollar inflows, Bitcoin's market cap expands 2.5 to 3x. Why is that? Because it's thin, it's scarce, and it's reflexive. Once the price moves, everyone notices very quickly, and FOMO is a monetary feedback loop that happens time and time again. So if I'm doing some conservative napkin math here, $135 billion of net inflow times that 2.5x elasticity, that is $337 billion in market cap expansion for Bitcoin. And that's just with 1% of these reserves. We're seeing gold move trillions of dollars of market cap every single day. You need to understand that Bitcoin is so small still. We are so early. It's only $2 trillion out of the $900 trillion of global wealth. Look what the central banks did with gold over 2025 and through 2026 so far. Look at what allocators are doing with silver. The idea that Bitcoin cannot rocket up to 300K in a short amount of time is total hogwash. It absolutely can. It doesn't even need to replace gold. It just needs to be taken seriously by 1% of a system that moves in trillions. And when that happens, the revaluation is going to be very violent, it's going to be very reflexive, and it will be impossible to chase. We've seen the spot ETF supercycle start, obviously, so we're entering into this weird new regime where Bitcoin is starting to finally be accepted. The Senate Ag Committee just approved their half of the crypto market structure bill today, which is just another catalyst to this weird world where Bitcoin is just another ticker out there. And now that it's inside the system that's acceptable by investment advisors, pension managers, and family offices, the inflow potential scales like a fire hose. You're probably going to see some first mover nation like Nigeria or Saudi Arabia to put a fraction of its reserves into Bitcoin, not because they love crypto, it's because they need a neutral, mobile, seizure-resistant monetary asset in a world where the FX reserves have become negotiable instruments of diplomacy. And then obviously, once that line is crossed, game theory just takes over. The second and third adopters are going to have to move very quickly because credibility compounds. And with this treasury market fragility, like I said, nobody is participating in the US bond auctions anymore. The foreign participation is dropping dramatically as the bond volatility continues to rise and all of the foreign holders are stepping back. All of the global central banks have to continue to ask themselves, why are we holding IOUs from a country with $2 trillion in annual deficits and a partisan debt ceiling crisis every single 6 months? Bitcoin doesn't care who is the Speaker of the House, it just keeps ticking. The bottom line is that Bitcoin is no longer the rebellion like it once was. It is becoming the response to sovereign risk, to debt volatility to dollar fatigue. If you are a policymaker or a portfolio allocator or a sovereign treasurer, the question isn't should we hold Bitcoin? The question is, can we afford to be last? My name is Adam Livingston. I am the Bitcoin Wizard. Thank you so much for watching this video. Please like this video and subscribe to Swan as we bring you the daily Bitcoin insights during the greatest wealth transfer in the history of humanity. Have a terrific day. Do not party too hard. Class dismissed.